Nvidia reports earnings in less than 48 hours, and the options market is pricing the smallest move in 4 years. Revenue is expected to almost double, $92 billion. But here's the problem, 6 out of the last 8 quarters, Nvidia stock actually dropped after earnings. So will this time be different? Or is sell the news about to happen again? Let me show you exactly what I'm watching. My name is your name, and I track Nvidia earnings every single quarter so you don't have to. Here's what we'll cover in this 10-minute breakdown. First, what Wall Street expects: revenue, EPS, margins. Second, the sell the news pattern, 6 of last 8 quarters. Third, key things to watch: guidance, data center, Vera Rubin. Fourth, the technical setup, support, resistance, downside risk. And finally, my game plan, how I'm playing this earnings. So here's what Wall Street is expecting for Nvidia's Q2 FY 2027. Earnings come out Wednesday, August 26, after market close. Revenue consensus is around $91.90 to $92 billion. That's nearly 97% growth year over year. EPS is expected at $2.09, up about 99% from last year. And gross margins are expected to hold at around 75% on a non-GAAP basis. Nvidia's own guidance was $91 billion, plus or minus 2%. So the consensus is slightly above guidance, meaning there's less room for a big upside surprise. Now here's the tension. Despite all this growth, 6 out of the last 8 quarters, Nvidia stock actually dropped after earnings. Why? Because expectations are already sky high. When you're growing at 100%, anything less than perfection gets punished. The options market is pricing a move of just 5.7 to 7%. That's the smallest implied move in 4 years. So Wall Street isn't expecting fireworks. But there's a 50% probability of a move greater than 7.5%, which is about $16.46. So it could still be volatile. Here's what actually matters: guidance. Bank of America expects Q3 guidance of $107 to $108 billion. The street is at about $104 billion. If Nvidia guides above $107 billion, that's a big positive. Also, China. Nvidia's current guidance assumes zero data center revenue from China. Any approval upside there would be a huge bonus. So watch the guidance number closely. That's what will move the stock. Second thing, data center revenue and margins. In Q1, data center revenue was $75.2 billion, up 92% year over year. That's the engine of Nvidia's growth. But here's the margin risk. Memory now accounts for 40 to 50% of system cost. It used to be 15 to 20%. That's putting pressure on gross margins. If margins come in below 75%, the stock could react negatively even if revenue beats. Third thing, Vera Rubin. Nvidia's next general platform is already shipping, and demand through 2027 and 2028 is already lined up. This is important because it shows the growth runway isn't ending anytime soon. But it also means expectations for 2027 and 2028 are already baked into the stock price. So even good news might not push the stock higher, because it's already priced in. Now here's what most YouTubers won't tell you, because they want you to buy the hype before the dump. Let me show you the technical setup. Current price is around $216 to $220. The 52-week high is $236.54. So we're not far from the top. We've seen a 3-day sell-off recently. Technically, the stock could go down to $180 support level. That's about a 15% downside from current levels. Call wall resistance is at $220, so $220 is a key level to break. Put wall support is at $215, so if we break below $215, downside could accelerate. Analysts are still very bullish. Stifel has a $282 target. TD Cowen says $275. B of A is at $350. Oppenheimer at $265. Consensus strong buy with about 40% upside to $306. But here's my honest take, the risk is to the downside this quarter. The beat margin is shrinking. Last quarter they only beat by 4.6%. And the sell the news pattern is real, 6 of the last 8 quarters. So my game plan, I'm waiting for the pullback. If the stock drops to $180 to $190 after earnings, that's a buying opportunity. But I'm not chasing it at $220 going into earnings. Now let me address the bull case. If Nvidia guides above $107 billion, the stock could break $220 and test the $236 high. If margins hold above 75%, that's another positive signal. But remember, the options market is pricing a small move. That means Wall Street isn't expecting fireworks. So the risk of a downside surprise is real. And here's the thing, Nvidia has been the best performing stock in the S&P 500 for 2 years. At some point, the law of large numbers kicks in. You can't grow at 100% forever. Let's quickly recap what we covered. First, Nvidia Q2 earnings expected at roughly $92 billion revenue and $2.09 EPS, nearly double year over year. Second, 6 of the last 8 quarters saw, sell the news, the pattern is real. Third, key things to watch are guidance above $107 billion which would be bullish, data center margins, and the Vera Rubin ramp. Fourth, the technical setup shows resistance at $220 and support at $215, with downside to $180 possible. Fifth, my game plan is to wait for a pullback to $180 to $190 before buying. If you want to understand how I trade earnings, watch this next video, link to related. Like, subscribe, and comment your take. Is Nvidia a buy or sell before earnings? I'll see you in the next one.